Welcome back to another episode. Today, we're going to take a closer look at Nvidia, more importantly, a partner of Nvidia. But we can see Nvidia did have an amazing day. The stock was up over 3.5%, and it just continues to dominate pretty much on a daily basis. What I also want to focus on today is Supermicro. Supermicro, we can see, is up roughly 205% year to date, but from its year to date high, the stock is down roughly 26%, even after having such an amazing day today where the stock was up over 12%. So in today's episode, what I want to do is kind of take a closer look at this partnership between Nvidia and Supermicro and what Supermicro recently announced at some keynote events. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so recently during Computex, Supermicro had a keynote event as well, and this is one that took me some while to listen to, and I finally got to, and there were a lot of great information here that I think all investors should know. So Supermicro is obviously, we can see from this image, a designer and creator of a lot of rack systems. Their products tend to be faster to market. Their products tend to be more reliable, and that's some and more customizable. And those are some of the kind of the solution strengths that they have. Obviously, Supermicro is benefiting due to the huge growth in AI servers. And more importantly, I mean, most recently, we did hear from NVIDIA's CEO, Jensen Huang, that right now we're going into this market where just a few months ago, they were making 10,000 servers with 10,000 GPUs. Right now, they're already planning servers with 100,000 GPUs. And in the near future, they can see servers and data centers being built up with 1 million GPUs. So just that alone can kind of showcase why there's a bullish reason to be excited for Supermicro and its overall potential in the long term of things. So I definitely shared my thoughts on Supermicro in the past. I do believe there's growth opportunity, but for me, it's definitely not a business that I would enjoy right now. I personally would continue to hold Nvidia and invest in other companies that can benefit in the AI space, maybe not necessarily in the hardware. But during this event, Supermicro kind of talks about where the next phase of AI servers are going. And that next phase is actually direct liquid cooling. You guys might see it as DLC. So direct liquid cooling in the past has not been a fan favorite. The reason being is they have long lead times. They tend to be more expensive than air-cooled system. They tend to have questionable reliability, and because of that, direct liquid cooling has had less than 1% market share for the past 30 years. And let's be honest, in the past, there was no real need for direct liquid cooling, but right now, as we are getting our AI chips like the Blackwell getting more expensive, more power hungry, which means hotter, there needs to be a way to cool that at a more efficient way. And that more efficient way is liquid cooling.
Before we go any further, we are now on the road to 50,000 subscribers by the end of the year. Thank you all for the crazy support. So if you haven't and are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support the channel a little bit more, make sure to check out my special offer at fool.com/Jose. Now back to today's episode.
Another great perk for direct liquid cooling is because you are reducing maybe some of the air-cooled systems out there. So some of those heavy HVAC systems that probably use a lot of energy, you're reducing your energy per data center. And what's going to end up happening is those data centers are going to have less power usage. So they're going to use that less power or that extra power that they have now into building more GPU systems. So Supermicro mentions that their direct liquid cooling is at a whole different level. They promise that if you order, they can get you a complete scale to delivery DLC in 2 to 4 weeks. I think that is insane. They mentioned they're shipping, I believe, about 50 DLCs already per day right now, and they can do about 1,000 DLC units per month. They also mentioned that there's really no premium on their DLC data center infrastructure and hardware, so it's not necessarily more expensive. They have higher performance and solid uptime, so reliability is not a question for them. And this is the crazy thing. They think within the year, DLC will become 15% of new data center deployments within 1 year. And I can definitely see that future because, like I mentioned, things like the Blackwell, the upcoming AI chips are just getting hotter. So this is pretty exciting because Supermicro, right, they're able to get it to the market a lot faster. They have expertise in this, right? This is not something that they just started doing. They've been doing this for a while, and they do believe that they can gain a lot of market share here. Some examples that they kind of showcased during this keynote is X. X is building some of the world's largest, highest performing AI large language model cluster on Supermicro liquid cool rack scale solutions. And this is by Elon Musk. So we can see they do have big companies and big customers right now that are going to be using their liquid cool solution. Now, one thing that I got pretty excited about during the keynote is our favorite CEO, Nvidia CEO Jensen Huang, did show up and was the greatest salesman for Supermicro. So Supermicro was showcasing this rack that Jensen is touching, and this is the 72 NVL for the Blackwell, and this is a direct liquid cooling one. And this they mentioned during the keynote that this sells for about $3 million. And Supermicro can ship about 1,000 of these per month and then times 12. So if we just do a quick math, and I think I did it here, yes. So 3 million times 1,000, that's already $3 billion, and $3 billion times 12 months, that's about $36 billion in revenue a year if Supermicro is able to ship 12,000 of these per year, right? The 1,000 per month. That obviously comes with a lot of speculations that, hey, look, they get enough Blackwell chips. I don't know if they will, but if they're able to help, if Nvidia is able to really improve their supply chain issues, then Supermicro definitely has the ability to make some crazy amount of revenue. And if it is true, if Nvidia is able to beat supply chain, I do believe that will bode well for Supermicro. And remember, those were just top level numbers on the higher scale. Obviously, because of the competitive space here, there might be some pricing cheapness. So it doesn't necessarily mean that if they sell 12,000 racks, then it's going to be $36 billion right there. But it's a ballpark. And the reason I'm doing that is because I wanted to see what analysts were expecting for this company's revenue in the upcoming years. So the next fiscal year, which is about 15 months from now, is about $24 billion. And the one after that, which is about 26 months from now, is about $28 billion. So this is much higher than that top level number I just estimated. And that was a very top level number. Like I mentioned, if they're able to sell just NDL units, that's not going to be the case for them, but they do have that opportunity for them. So if Nvidia is able to increase their supply chain issues, I think Supermicro can easily beat these numbers. I mean, Supermicro mentions in their last quarter, and their last quarter was quarter 3 for their fiscal year. They're going to report their fourth quarter in the June for the June quarter. That will be their fourth quarter, and for that quarter, they estimated about $5 billion to $5.5 billion for that quarter, and that run rate would suggest somewhere around $20 billion in revenue. But the company is expanding their Malaysia plant, and with their Malaysia plant, they are probably able to get closer to 25 billion. I do believe they're going to get closer to that 25 billion. Again, that is a run rate. So already the next fiscal year numbers, in my opinion, are looking pretty weak or maybe not pretty weak, but I believe analysts might be underestimating this company's total revenue potential. Supermicro's PE ratio forward is 36 and forward 1 year is about 25.87. Forward is the end of this fiscal year, which ends in the upcoming weeks. I believe it's going to end in this June quarter. So it might seem expensive when you think of that, but it's only a few weeks from now. Supermicro's PE ratio forward 1 year, which is pretty much about maybe 13, 14 months from now, is 25.87. I do believe those numbers are a little bit high, But like I mentioned, I do believe analysts are underestimating, so the actual number might be a lot lower. So if you definitely see the potential and are excited about this market, I can see why Supermicro would be a nice buy in those maybe $700, maybe even here in those $800. I personally, though, am not an investor of Supermicro just because the business as a whole is pretty wonky. They mentioned here, we can see it perfectly. Their gross profit margins have decreased because this is a very, very competitive landscape. The one great thing about Supermicro is another thing, though, is because this company is trying to grow at fast levels, they're using as all their cash that they have available. We can see cash from operations in the trailing 12 months is negative, and that's because this company is using all that money to buy as many GPUs as possible. And to be able to do that, they have also increased their total long-term debt to be able to build up that capital. And we can see cash and short-term investments is up 2.1 billion. So this company is definitely going in that aggressive route to try to expand as much as possible. But that could be seen as, hey, look, this company sees this market as a huge growth opportunity. Now, there was a question during an analyst conference the same day of the Computex keynote, and one of the questions was like, hey, look, you guys have mentioned that, look, you're fighting for 14 to 17% gross margins in general. And they mentioned that, hey, look, it's very competitive out there, and there will always be companies that are trying to buy their way in using margins. So we can see that at the end of the day, there's a lot of competition in this space, and that's why personally I'm not a huge fan. But they do mention that regardless, one thing you can't dispute is that Supermicro brings the best performing products at a reliable rate, and such at a quick turnaround, which results in the lowest total cost of ownerships. So they're doing pretty well there. And the great thing and the main reason is because they're so engineering centric that they design their own chassis, they design their own motherboards, and they design a lot of great things that affect the energy consumption that provide even more solutions. Then you add their expertise of liquid cooling that this company has been doing for a long time, and that's one of the main reasons that they believe they'll be able to stay within those margin levels even with such a huge competitive market right now. So like I mentioned, I do believe there's growth opportunity here for Supermicro. I believe analysts are underestimating what this company can do in forms of revenue and earnings per share. And also, we do have this huge growth opportunity as data centers are getting bigger and bigger and bigger, and there is this strong partnership between Supermicro and Nvidia. At the end of the day, the competitive landscape and the moat of this, in my opinion, is not as strong where I personally would want to invest, even though I believe the company can definitely grow. So this would be one of those companies where I believe the moat is not strong enough where I would have to worry about it. Hey, what is the competition doing? Is the competition really fighting with these margins? How can they impact this and how can they impact that? So for those reasons, I personally would skip on Supermicro, but it's not for that I see the stock price dropping anytime soon. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.